Trading Capital's exclusive analysis. In today's video, we're discussing the weekly and daily charts of all of the S&P 500 sectors to really try to identify which sectors are going to be breaking in an uptrend or falling in a downtrend. We'd like to try to catch both sides of the trade because that's where the alpha lies. So looking for any sort of signals in the market to identify these capital rotation trades allows us to position ourselves and take positions accordingly to the flow of the money. Starting with the DJT, the Dow Jones Transports. Big down day on Friday, closing out 1.74% at the lows. Is this the start of a potentially a bigger decline in the Dow? It just might be. There's a little bit of a pattern that is developing here. This is a weekly potential head and shoulders. Now, with head and shoulders, it only is valid once you trigger the neckline. The neckline's all the way down here around this 13.5 zone. So clearly, a big fall in the Dow could happen, and you would still technically be holding the neckline. So roughly speaking, if the Dow is to fall to the neckline, it's about another 14% drop from here. That's pretty significant opportunity. A lot of Dow stocks would be hit pretty hard, and that would probably signify weakness in the market. So what we really need to watch out for is this a downtrend in the Dow, lower high, lower high, lower high, right off of this resistance. What I'm noticing here on the weekly chart, last week you had almost a breakout candle on the weekly chart, made a new high the following week, and then that was reversed and almost engulfed the previous whole week. That's a little bit concerning, and when I see that type of reversal off of a little bit of an impulse breakout candle, I become a little bit cautious about trading the Dow Jones Transports on the long side. You can see this beautiful parallel channel connects these three pivot highs and one major pivot low. Basically, the low boundary range of this channel is downsloping, so it's around 10,500, 10,400. Now, there's going to be some support levels. Even if the Dow was to fall all the way back to the neckline, it would still signify higher lows, which is an uptrend. It still remains bullish. But a big correction of roughly 13-14% is a pretty decent move that you want to try to avoid if you're long the Dow Jones Transports. Now, there's a big support level. This parallel channel, which is kind of your channel of support, has two main levels: minor support, intermediate support. So minor support's around 15,000, intermediates around the 14.1 zone. So those are kind of your areas to watch to go long. Right now it's a no touch for me, but it is looking slightly bearish with some individual names starting to underperform. Looking at materials on the daily chart, materials are trying to break out to the high side here. Nice little potential topping tail, no volume behind it. So this does have a chance at moving higher here. Materials actually could be poised for a little bit of capital rotation. If materials break out of this little bit of a wedge pattern, that's going to have a bullish move, a much higher degree of reaching the $95 zone. One of the reasons if materials start to break out and they could have a massive amount of power is because the sector is so small in the S&P 500, it doesn't take much capital to move this sector higher, especially if you see some money rotate out of tech. But ultimately, you've been putting in this consolidation pattern really since 2021. These highs, these highs, these highs, this low. So this is a big coiling price action. A lot of momentum is building in this range, and if you do get a weekly close outside of these pivots, this could be a sector that does see further upside. So keep it on watch for the long side. You're still technically at resistance, so there is a chance of more consolidation, but just watch this sector closely, and I'm looking for a close above 86.30 to basically be more bullish on the sector. XLC. XLC, this one's very manipulated due to the fact that how heavy Meta is weighted. Meta is the heaviest weighting in this ETF by a large degree. There's actually a lot of weakness under the hood of this ETF despite the strength in Meta. Notice that the communications ETF I put in this weekly doji candle on slightly above average weekly volume. So that's a little concerning. That's showing that, okay, maybe there's some lower price action to come, or at least more sideways consolidation. So this is probably a sector that isn't going to move too much higher in the near term. It actually runs the risk of moving probably lower back to, say, this $75, $74 range. Now, there's still a potential that it wants to test this double top. Remind you, it's going to need Meta to start to break higher again because it has over 20% rating. But when you look at this Meta move that it's had, you ultimately should see some more profit taking. You're into some massive trend lines of resistance on Meta going all the way back to 2012 pivot, going back to 2021. So keep this stock on watching the communications ETF. I personally would not be chasing communications up here just because Meta has had a phenomenal run to the upside and likely will see some profit taking and trimming of hedge funds because the position on the long side has actually probably moved up past their portfolio threshold. Looking at the weekly chart of energy chart is looking strong. This is the highest weekly close in basically 15 weeks for energy. Basically, it has to go. You have to go all the way back to October here, when energy closed at 86.59 on the session here, and this is now your highest weekly close in 15 weeks. So what is that telling us? That's telling us that maybe oil is going to continue to move up here. So even if we just look at the quick daily chart of oil, oil had that big breakout move, huge sell-off, and right back to that original zone. So this is telling me that there's a potential oil wants to break out of this rounding formation and move much, much higher. Breakout target 184, breakout target 2, around 90. You get to $90 and you probably see this XLE ETF basically trading all the way up into this $91 range. I still like the daily chart of this action. You can see a nice bull flag breakout here on the daily chart. This is a wonderful technical breakout. You had a little bit of consolidation off of weakness in the S&P 500 on Friday, but this chart is looking extremely bullish for a continuation move higher. Let's jump along to financials. Financials have been a powerhouse sector. JP Morgan, the likes of some of those stocks. I mean, just take a look at this JP Morgan chart. Absolutely sky high, still trading at all-time highs. But when you look at financials, financials have had a stellar run. You're now entering an RSI zone that is extremely, extremely overbought, and we really haven't seen any sort of correction. Now, typically when you get the first pullback from an RSI being overbought, you get a really, really big bounce that actually makes higher highs. So it's going to be interesting to see if we get a retrace back down to say 3770 or this pivot, and then we could potentially even bounce all the way back up to this previous trend line. It does look like financials want to push all the way back up to a new high around this 43, 44, 45 zone. So obviously one of the reasons financials have rallied is because at the start of the year, when you look at kind of rates and how rates were going in a big downtrend really into the October, November, December, January timeframe, and now that rates have actually moved up, this might put pressure on the financials. You know, higher rates typically aren't good for for financials, but they have been tapping that discount window, which I think is helping liquidity flowing into the banking stocks. But again, rates at the start of the year, the rate cuts expectations for the market were roughly 6 to 7 rate cuts. It's now been pushed down to 4, basically since we've had higher CPI, core CPI, and PPI numbers come out in the last week. Let's look at industrials. Industrials have been a very strong outperforming sector. You can see industrials are into this long-term resistance trend line. You have this 2007, 2008 pivot zone. You have these high pivots in 2021. You're trading into that zone. You are trading into that zone, so there's a lot of resistance here. It does leave it vulnerable to a small pullback, but I do have it priced in that industrials could actually move higher all the way up to about 125. That is my upside target. But what I think could happen is I think industrials could actually pull back with the market and then make a final push higher here in the coming session. So look for this 110 to 108 pullback. That is kind of your area. If you get a retrace on industrials, that's probably a buy zone on the long side for industrials, or at least that's what I'm watching in the near term. All right, let's quickly move along to the technology. XLK actually was negative on the week, underperforming the S&P 500. Nasty down candle on the daily chart. If you look at the weekly chart, take a look at this resistance parallel channel, which connects a low in 2008. That was kind of your big Powell temper tantrum in the market. XLK sold off from 76 all the way down to 60 or 58, a big sell-off. Then this was your COVID panic low. This was kind of your capitulation low, kind of freaked out, blasted, overshot support, and then you had a high here in 2021, and basically you're hitting a low here in 2022. Now you've hit a high here again in 2024. So just look at the market structures, right? Big move up, big move down. Big move up, what typically follows next is a big move down in technology. If technology starts to sell off, it's going to drag the whole market down because it has the highest percentage weighting in the S&P and the NASDAQ stocks, as well as some components in the Dow with Apple and so on and so forth. So if tech sells, it will be a big headwind for the overall market. But then you can also simultaneously look for rotation trades, which is why we do these videos, because since the sector is such a huge saturation in the S&P 500, you know, I think it was almost pushing 30% of the weighting, which is abnormally high on a historical basis. Trades and capital will rotate into other sectors because there's some fund managers, financial advisors, hedge fund managers that have to stay long the market. So when they pull money out of overbought, overbloated sectors, when positions become too high and too heavy because they've had stellar runs, they look to trim and rotate that capital into new trades. Looking at XLP, XLP actually looks a little bit more bullish. It's consolidating above the EMA 113. You're reporting in higher lows. You haven't broken these highs, but if you break these highs, this little bit of a downsloping trend line, it looks like it's going to have a big move to the upside. One of the reasons, you've been doing the same consolidation coiling pattern really since 2021 here. A big base is forming here in XLP consumer staples to move higher. Basically, the daily upside resistance that I have, I could see it minimum hitting $76, and that would trigger a breakout, and then you would have to watch for a confirmed weekly close. So I think that this sector is looking a little bit more bullish on the long side. If for some reason you break this little trend channel that we've been chopping in since the low in October of 2023, if you lose the EMA 113 simultaneously, or this pivot low, then the sector becomes a little bit more bearish and you could retrace back down to 65. So as long as you hold above this $70, $71 zone, I think this sector can be bought on the long side. And if you get a weekly close below that, then it looks likely you want to flush back down to 65 on staples. But another sector to keep on watch for the bullish price action. Real estate, XLRE. XLRE, I think, is in for a little bit of trouble here. We did get some weak housing data last week that came in below consensus. It's interesting to see that XLRE did put in a weekly little hammer candle here showing a potential sign of a reversal, but it did gap down on Friday. So despite it having a stellar week during the initial phases, it closed the week negative on the daily chart session. So interesting to see this sector. Even on the week, it closed down 0.16%. You're underneath the EMA 113, which is resistance, big strong technical resistance. And then you also have this down sloping channel where you can see we've been rejected now for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of consecutive price action. Now, if this does get a weekly close above this down sloping trend line, then this could be potentially forming a bull flag. One thing that makes me skeptical is the fact that interest rates have also broken out to the high side on higher than expected inflationary numbers. So obviously real estate is super sensitive to the interest rate environment, more so than some other sectors. Looking at this longer term weekly chart, you can see you have a left shoulder, a head, a right shoulder. If this does trigger a head and shoulders pattern, there's trouble for real estate. You're still seeing weakness in the commercial side of real estate, so a lot to pay attention to. It's a very small sector of the market, but definitely a much larger sector of the overall economy when you factor in how much global wealth is tied up in real estate investments. Let's look at utilities. Utility weekly chart is looking not the greatest. You did put in a weekly reversal candle here. It's actually a bullish engulfing candle. So there's a shot that you could push back up to the high end of this range, call it $65 resistance. Now, one thing about this sector is you're still putting in some very strong lower highs. So it's signifying a downtrend, which means that there's always a chance that you want to retest the lower boundary trend line. You have a big support trend line to buy on the long side if you flush down into that range. But ultimately right now you're just putting in a wedge pattern. This is kind of just going to chop investors up and down until you get a bigger directional break. Do you break out of the channel to the upside, or do you break down, which sends you further to the next support zone? So this is a no touch. Utilities right now, again, are super sensitive to interest rates as well. The positive is that you can move up a little bit higher here in the near term, maybe to gap fill, maybe to 65 if the market continues to firm up and you see a rotation trade, say, out of technology. Healthcare is looking extremely bullish. XLV, take a look at this weekly chart. Weekly chart, you had this big consolidation pattern, kind of what we were discussing in many other sectors. A lot of stocks have this, a lot of sectors have the same long-term 2021 consolidation pattern. And just like some other sectors I'm expecting to break out, healthcare has done that. Healthcare has had a clear technical breakout. Now, just because something's broken out doesn't mean you go fully long, load up your portfolio. I would actually caution people chasing this price action, at least here, because look at this move. From 122 at the low here, all the way up to about 145, it has had almost a 19% move to the high side with consecutive moves in a row. You've really had no consolidation. So what does that mean? That makes healthcare overbought. Weekly RSI hitting overbought territory. Daily RSI, you have 1, 2, 3 pivot highs on the RSI, 3 massive negative divergences in the price action, and this probably sees a small pullback. I think that healthcare can remain bullish, but I think that in the short term, it needs a pullback to really justify and sustain this move. I could see a pullback back to this zone. That could be bought. That's the zone that I am personally looking for if healthcare gets a retrace. If you start getting a weekly close back inside that trend line, then you could even have a move lower. But as of now, I'm looking for a retrace and a continuation move higher in healthcare. And what this is telling me is that, okay, maybe we are seeing more money that's going to rotate out of tech. You see healthcare up 1.12% on the week, and then look at XLK down 2.5%. So definitely a clear rotation trade in my opinion. Let's look at XLY consumer discretionary. So this is dominated by Amazon and Tesla. Tesla, obviously, everyone knows Tesla has been getting obliterated, but it has had a positive weekly reversal, 2 consecutive weeks of upside, closing around the 200 zone. Tesla looks like it wants to retrace to 222. That's the weekly EMA 113. Just caution you that Tesla has hit a little bit of technical support, but I still have it priced in to go lower after we get this retrace. I think if Tesla retraces to this zone here, then that becomes a small technical short opportunity for potentially playing a bigger move to the downside. Now with this XLY ETF, if Tesla continues to bounce and Amazon shows strength, this chart pattern actually looks technically bullish. So right now, notice how you have this neckline pattern over here. Tried breaking out here, big rejection, created a higher low, which is signifying a small uptrend. And then you had a little bit of a breakout candle, never confirmed, retested back to the support zone, and you're holding support. This is impressive that you're holding support despite the weakness that Tesla has seen in the coming sessions. So maybe this is telling us that Tesla is going to push higher to that 225 zone. And if this breaks out, I mean, technically speaking, you do have a potential move of all the way up to 235. So it's going to be interesting to see how this shapes up. I mean, if you throw in the daily 200 and the 50, remember, we did get that golden cross that occurred on the weekly chart time frame. That typically is bullish. So watch for XLY. Watch for a continuation move in Tesla. Amazon you have to keep your eye on because that's had a parabolic run. Amazon is coming up into a huge resistance zone, but also taking a look at the similar chart pattern. Look at this similar chart pattern here on Amazon. This is your head and shoulder or inverse head and shoulders, your neckline breakout. This is clearly broken out. Now what could happen is we could see Tesla move all the way up to this target, and we could see Amazon actually retest support. That's kind of what I'm expecting here. I think that's why this XLY ETF is going to be quite choppy in the coming sessions. I think Tesla could move up while Amazon pushes down and see some profit taking. On that note, hopefully this video helped everybody learn a little bit about the sectors and some of the capital rotation trades. If you found this video helpful, please check out my tradingcapital.ca Discord where I run a swing trading and day trading service. We've taken on some new positions recently with members, so we're super excited to see how those pan out in the coming weeks and months to come. On that note, take care everybody. We'll see you on the charts a little bit later.